So Scott Saunders, your question. Rents are up in St. Louis. What do you see going forward? A return to the medium bump in the 3 to 5 range? Or are there variables that can lead to continued higher rents in the loop? So Scott is correct, but this is just going over the ridiculous rents increases going on in St. Louis. Scott, my own personal opinion is that I think rents will continue to go up with inflation. I think it'd be unrealistic. I don't know, maybe not sure I could go to church and go online and tell people rents are going to continue to increase at 15%. Even though the data would back that up. In my mind, rents will go up with inflation at 5% and everything else is a bonus. What are your thoughts on that?
No, Jimmy, I agree with you. I think we got a nice little pop, but if I were to be the safe bet, figure it stays about even with inflation. What created the pop? Like what led to this pop recently in rents? What are the economic factors that pushed them up?
A lot of people do what I do are doing new builds, right? But I'm not doing new builds. You want to know why?
Sure.
There's no land. There's no place to do new builds. There's no place to do build for rent in St. Louis. So it's like a strong economy. There's no inventory. Like rents are going to go up. And the secret's out nationally about St. Louis that Florissant in particular is getting rehabbed to be a great rental product. So St. Louis continues to do its job to be exceptionally mediocre, which I think is leading to rent bump. And then here's the other thing. I'm gonna get to some of the microeconomic factors. I'm gonna get into the macroeconomic factors, of why this is happening. And I think it's gonna continue to happen. So this article I got from the Section 8 website. So we're experiencing this rent bump from the private market, which is then forcing the government to raise Section 8 prices, which I believe is very interesting. And here's where I think we're gonna be sitting the next 5 to 10 years, guys. Like the COVID pig through the python and nobody building houses after the Great Recession. Before the Great Recession, we had a population of 300 million. And we had 4 million in inventory. Now we have a population, 35 million more people and 3 million less houses. Like it's simple, basic economics, supply and demand. Why it popped so hard in St. Louis, I got to keep investigating. I guess it popped so hard because of the exceptional mediocrity of St. Louis, where no one expected, there's nothing that special about it except there's no inventory. And then the inflation thing, we were doing inflation workshops in 2021 as the Fed is showing, hey, inflation's not under control. So maybe, Scott, maybe we will get more big rent bumps because of inflation. But let's say I tell everybody, oh, we're going to get a 15% rent bump in St. Louis, and they get a 7. They're going to be disappointed. Or if I tell them, hey, you're going to get 5, and they get 7, Jimmy, you're the greatest turnkey salesman I've ever met. That's where my mind kind of goes. But prices going up, guys, is having legit effects on Section 8 pricing. The next 10 minutes of us talking about this might have changed your buying criteria, might affect your buying criteria. I know it definitely will for me. So here's another article. An important tool to increase rental housing choice ramps up in St. Louis County. So they used to do Section 8, be like, you're in this metropolitan area, here's your Section 8 pricing. Now Section 8 is doing it now by zip code. So it's more detailed instead of just boom, here's your price. And that's why Section 8, your first year, used to be always underpriced. So now a lot of people are like, oh, Jimmy, how do you calculate Section 8 rent? And here's some government document that, like, I'm not stupid. It made 0 sense to me. I'm like, Rhonda, how do we calculate Section 8 rent? She's, oh my God, Jimmy, I can't tell. What she has been able to tell is that it equals Zillow now. So 2 years ago, we would say Section 8 rent was 150 below Zillow. Turnkey is 100 above Zillow. And now Section 8 seems to be right at this estimate. For a lot of out-of-state investors, they've been like calling the U-Buy STL people and be like, I want Section 8 deals. If I get a 4-bedroom, I'm guaranteed $1,800. So I want to clarify, you guys, because you're going to be seeing a lot of this. This is the max allowable offer. It doesn't mean if you have a 4-bedroom in the ghetto, Section 8 is going to give you $1,800. Does that make sense? So like I've seen a lot on social media about this. Still, Section 8 still has to see comp. So 20% of what we manage right now is Section 8. What we build is a Section 8 turnkey map when we're comping out a house for turnkey, we will send this to Section 8. We'll say, hey, I know, Mr. Government Worker, you don't want to necessarily do this job, so we'll do it for you. Here is a Section 8 comp right in that area of 1125. So we're going to try to game the system. If you guys say, hey, I want Section 8 turnkeys, we'll also be able to say, hey, we have these comps in this area. Like that's hard, real data. So take, for example, this house, a 2-1, 110 Jennings Drive. Before this Section 8 rent bump, I would have never considered turnkeying it. Now we will. So you got to ask yourself with your buying criteria, Would elevated rents make you want C-class asset at lower purchase prices? And I do think, especially with 4.99% financing and these higher rates, you can get back to the 1% rule and more cash flow even in 2024.
Jimmy, I'd say the other comment you may want to just expand on is if you get a Section 8 tenant, is it less likely you'll have to evict, less turnover, that kind of stuff, right? Because that's what the downside, my understanding, the downside of them not paying is then they could lose their voucher, which is, oh, now you lose your free money, right?
So my opinion of the Section 8 renter is that it's not the destitute. It's really not even the poor. It's the people motivated enough to work the system.
Yeah, there you go.
So they do value these vouchers and they are going to take care of the house. My own portfolio, I like 2-1 Section 8 rental. Because it guarantees no teenagers. Because at the end of the day, who tears up your house? It's not the renter.
So does Mike Corbett, would that count as would that be a good Section 8? It's a 2-1.
Yeah.
650 Corbett. Shit,
Yes.
Because that one's been hard to like right now. If I got a good Section 8 tenant, because right now of all my properties, that's the one that kind of does the worst. It's just, it's a 2-1, the tenant,
I would definitely.
No, we're going through, we had to evict the tenant.
Yeah, tell Rhonda Section 8 only.
All right.
Because here's what's going to happen. So U-City is like this weird area where there's $1 million homes. Since our friends with their new Section 8, whatchamacallit, goes by zip code now, they're going to see this zip code and they're going to see $1 million houses in it. And so I think you'll get a disproportionately high Section 8 rent for that house.
Yeah, we don't think there's, in terms of maintenance of those homes, then you don't see a big difference from Section 8 to their typical turnkey properties.
Every time they renew the lease, Section 8 is going to inspect it.
Now, doesn't the tenant, or isn't Section 8, how it is out here, I recall, they're responsible if the tenant does damage to the property, right?
Let me clarify that, because you gotta,
Okay,
I don't want to say that.
No, I know. I just remember something in my back of my mind said.
I don't think that's accurate, Harold. I think what happens though is they can lose their Section 8 benefit if they destroy a property. We file a claim with Section 8 letting them know that they destroyed the property and that tenant then could lose their benefits.
Unless they paid for the damage.
Correct.
So there you go. There's some leverage there.
It's not a guarantee.
Yeah.
I had one in Tennessee that 10,000 of damage. I like Section 8. I think they're great because you get a government check guaranteed. So I'm a big fan of them.
Scott, you got a $276 rent bump.
Exactly.
I'm right there with Scott. 2 out of my first 4 were Section 8. One of them unbeknownst to me, but it's actually turned out to be one of my best performing for 4 years now. Not one person has moved. Rent's paid on time. Every year it comes up for renewal. It's clockwork, and those are the 2 that I don't even think about every single month.
And then I like showing you guys hard numbers. These were our increases last month. They take effect, but this is for, and Rhonda tracks this for you guys, but this is since October of 2022. And I think this increase is going to go up with the new rent increases with Section 8. But our average bump per month is $135. Like, you're just not getting that with a market tenant. And so year on year rent increase has been 12%. So check this out. Let me get up the turnkey deals map. This is our Section 8 map. This is Jennings Station. In general, before this rent bump, no way did we. So here, watch this. Watch very careful to the dots. You got Section 8, and then you have everything else we manage. So as you can see, we did not do anything that was not Section 8 in this area. Once you get into more C-class areas, the rents are disproportionately high to market. This C-class Section 8 gets $1,125. So $1,125 times 110. So I'm gonna do some quick math. Times 110. That equals 123. My belief is that you're going to be able to get cheaper houses cheaper than 110 times rent. Because, sure, I want to sell this to you guys for 140. Here's what'll stop me from selling it to you guys for that price. It won't comp out.
There you go.
So check it out. 2-1s in this area. The best 2-1 is 117. I want to sell it to you for at least 125 because I sell turnkeys at 110 times rent. But I'm not sure that's going to be able to happen in this neighborhood. Now, it's a C-class neighborhood, but does that make sense? So you guys might be able to get over the 1% rule with the C-class Section 8.
So you're not bumping the price, you're just getting better rent. That's what you're saying.
I can't bump the price. It won't appraise out.
What do you think that would rent for?
Rhonda and your greedy real estate property management team, Harold, is going to send Section 8 comps of 1125, 1222. Oh, Filbert's mine. That's awesome. And 1125. We're going to go Section 8. So my point is we're going to be able to give you guys pretty reliable data on what rents in those Section 8 markets are. And I don't think they'll appraise out at 110 times rent. So you could be getting a break on price there as well. It's my job to say, hey, you are going to be taking on a C-class asset. So just something for you guys to consider.
Hey, thanks for watching the video. If you make over 300K per year, I think my program could be great for you. We're gonna find beat up houses, like this one behind me that we just started rehab in. I don't know if the video is doing justice to how bad these floors is. And then let me take you through a spin here. This is the kitchen. You'll notice there is no kitchen, but our investors love deals like this because they know in 3 weeks, this is going to be a beautiful kitchen waiting for either a new homeowner or a new resident to rent. So if you're interested in investing in real estate in a completely passive manner and want someone to find the house, to fix the house, to find a tenant, or help you sell it, click the link below to book a call.